G'day and welcome again to Pure Property Investment One-on-One. I'm here today with Tuan Dung. Tuan is the principal of Duo Tax. Thanks for joining us, mate. We wanted to talk a little bit today probably about properties in general. Look, as investment property buyers agents, as well as buyers advocates for owner-occupied properties, we do buy property. Look, we don't specialise in new or off the plan. We typically buy established properties, and they can be 2-month-old, they can be 120 years old. Ultimately, our job is to really find the right properties in growth markets which are going to grow over time and provide the outcome that our objectives are set out to achieve. We treat depreciation as well as obviously the quantity surveyor's role in that whole gamut of what they need to consider when buying a property as a pivotal part to maximise cash flow if and where possible. There's been some changes lately in the federal budget, and I think we get, well, probably I know, we get that question quite a bit now from our current investors and would-be investors when we sit down and talk about certain property types. And specifically to that, we're probably asking the question, well, is my property, if it's an old or existing property, is there any point in actually getting a quantity surveyor in to do a schedule, and is it worth the while for me? So hopefully you can lend a bit of understanding and insights into how that looks right now in the market.
Yeah, sure thing, Paul. So I guess with the budget being the 9th of May 2017, there is proposed changes to apply new rulings, and that's specifically to do with plant and equipment on older properties. So if you buy a second-hand you're the subsequent owner of a second-hand property, you ultimately will not be entitled to claim depreciation on those plant and equipment items. That's not to say that you can't claim any depreciation at all. The key is that the building, if it is built after 1987, it is entitled to claim capital works, which is the building component, which is the building allowance, and that's the bricks and mortar. And ultimately, if it's built after September 1987, you can claim that, even though there are no plant and equipment items to claim. And also renovations. If the property is heavily renovated or even mildly renovated, the capital works components in that would be entitled to claim. So for example, you might have an extension that cost $150,000 to build at some stage, whether it's done by you or the previous owner. You can still claim that as depreciation over 40 years from the date the renovation or the building was built.
So that would be prorated in that sense.
That's
if you
correct.
Bought it and the renovation was done 10 years prior, you'd have 30 years worth of residual depreciation in that exact investment.
And that one report would then generally cover the depreciation and capture that over the 40-year life. Perfect. So it is a one-off transactional or report that allows you to maximise that cash flow from year on year without having to see a quantity surveyor every year to get that report.
Yeah, and that's the key too, I think, is probably leading into why it's important to the beauty about a depreciation schedule on a property is that it's a point in time which you look at the quality of the property, you do a full schedule on what exists and what the depreciation or the depreciable asset is in that property at that point in time. And it is good for 40 years unless you do anything major to that property in that time. So you don't have to get another report the next year, another report the next year, and you don't have a recurring expense. It's a one expense, which is a tax deductible expense, which you pay. You get the report, that report goes to your accountant, and therefore you look at claiming residual depreciation over the period of time which you own that property. Again, I think coming down to years and when properties were purchased, giving old, new, or somewhere in between, it really comes down to making sure that, and probably now more than ever, with the changes to the May budget, that you have a discussion with a licensed quantity surveyor such as Tuan and his team, because there are some intricacies that you need to be aware of, but I'd always say that it's worth the discussion. Before you do anything, ask the question, because if you don't ask, you will just never know whether you've left money on the table or whether you can't claim full stop. So my advice, always have that discussion beforehand. Pick up the phone, give someone like Tuan and Duo Tax a call, or anyone in that depreciation schedule space a call to make sure that you understand what you're in for before you go ahead and purchase that next property. His details are at the bottom of the screen, so feel free to give him a buzz. And from our side of things, you can always contact us as per the details below. All right, cheers guys, we'll speak soon.